What's up, guys? Mike here, head trader at True Trading Group. It's February 24th, one of the biggest single day declines in the history of the Dow. We were down well over 1,000 points today, all thanks to coronavirus and the fears that just continue to mount there with growing cases now outside of China. The main culprit here being South Korea and also Italy. Italy now over 200 cases. South Korea, I think, is pushing 800. And if you recall, a couple weeks ago, I made a video that said about the coronavirus because as the coronavirus was spreading in China, we still were seeing all-time highs in the United States. And I said in a video that as long as it remains an isolated incident in China and it does not, the spread does not get out of control in other countries, the markets aren't going to really be too concerned because China already said they were going to take the necessary steps to stimulate their economy, and China has the means to stimulate their economy to counteract an economic slowdown. However, the longer that this goes on, the more and more effect it's going to have on GDP growth. The China economy is basically at a standstill while they fight to get the virus under control. But the issue now becomes a acceleration of spread in other countries. Now, other countries like Italy do not necessarily have the means to stimulate their economy to counteract any type of slowdown in GDP growth that will happen from the coronavirus. Guys, this coronavirus is not a matter of health. It's not a matter of survival. Okay, H1N1, SARS, Ebola, those were much higher mortality rates. It was more of a health scare and a survival scare. This is not that. The mortality rate is much lower. This is an economic impact fear. Okay, if the virus spreads and you have more and more countries going into quarantine, less people going to work, less consumers spending money, less people traveling, it's going to have an economic impact that's going to be felt across the globe. And the numbers that came out over the weekend with specifically Italy and South Korea, also some cases in Iran, but it's now starting to scare people because now the spread is reaching other countries and they're not able to track the source of this spread as easily as they were in China. And they're starting to get the feeling that they're losing containment and they can't really pinpoint where the spread is necessarily coming from at this stage. So that's why you're getting the scare. It's not, I hear a lot of people saying, oh, well, it's not as bad as, the regular flu kills more people than the coronavirus, or these other viruses were way more deadly. That's not what this is about. This is not a matter of fear for your life, like some of the other virus outbreaks were. This is strictly an economic impact. Yes, the mortality rate is low, but that's not going to stop the effect on GDP growth if you have a economy as large as China's that is just essentially at a standstill and is basically on lockdown. And if that spreads to other countries, it's only going to get worse. That's what scared the markets today. Even though the markets are down over 1,000 points, there's still really good opportunity to make money. That's what I'm going to talk to you guys about today. We still made some good money today. I was long the TVIX. Okay, the TVIX is the ETF that tracks the VIX, which measures fear and volatility in the marketplace. It's a vehicle that I love to trade. If you have been a subscriber to my channel now for a while, you'll remember back in December of 2018 when the market had that huge pullback, when the Fed was raising interest rates. I was trading the TVIX basically every day. When the TVIX is in play, it's an amazing vehicle because the volatility is great, the range is great, and the liquidity is out of this world. But it's important to note that I only trade the TVIX during moments of intense volatility and fear in the SPY. When the SPY is making definitive moves lower, that's when I'm trading the TVIX. If I take you guys to the daily chart of the SPY, okay, this huge gap down, disregard this big tail. This is a misprint. We did not actually trade that high, disregard that. But this huge gap down, that's when I would be trading the TVIX. That's when I did trade the TVIX. During August, when we had the trade war fears, okay, I was trading the TVIX. Going back to December of 2018, I was trading the TVIX. When you have these big moves lower, that is when I trade the TVIX. It's not a direct inverse to the SPY, okay? It tracks fear and volatility in the overall markets. That's the VIX. And the TVIX is the ETF that tracks the VIX, okay? So the trade that I'm going to talk to you about here today is a couple lessons I want to go over with you. One, is how to tier into your position when your ideal entry points are not reached. I had a very specific game plan on this TVIX trade based on the SPY, and I never got my ideal entry. Happens a lot. Okay, the stock markets are not always going to give you the perfect entry point. You've got to be able to adjust. And when you do adjust, talking about adjusting your stop loss in the middle of your trade is also a very important factor that I did in this TVIX trade that I'm going to talk to you about, that I really want you to take away from this trade, on how you can make money even though the Dow is down 1,000 points. Now, a lot of people are going to ask me, I've got a lot of people messaging me on social media. Guys, if you want to follow me on Twitter, it's at Mike Edward _TTG. Okay, at Mike Edward _TTG. Give me a follow on Twitter. And a lot of people that were asking me on social media, a lot of people asking me in chat, Mike, what do you think is going to happen tomorrow? Guys, honestly, after such a huge down day like this, I would not be the least bit surprised if we were down another 400 points tomorrow. I would not be the least bit surprised if we were up 400 points tomorrow. Neither would surprise me. Now, my gut tells me that we go lower tomorrow. Keep your eyes on coronavirus headlines and news headlines at night. If anything else comes out of China, if anything else comes out of South Korea, keep eyes on the news headlines. But I think the SPY is going to get down and test 320. 320 is a very key area for the SPY. I'll draw out a nice little line here across this 320 area. And you can see the low from that first initial scare of the coronavirus. This is the first initial scare of the coronavirus. You can see we found support at 320. And then as you go back even further, you can see this real nice support there at 320. Okay, so there's your 320 area. This is the area that I think we're going to get down to, possibly to test tomorrow. So what I'm looking for tomorrow to see, do we have a big gap down? Do we have a big gap up? I'd like to see us kind of open right where we are, just open right around here, and then just push lower off the bell and see if we can get down and test this 320 area that you see drawn on my screen. Get down, test that, and then eventually bounce back off that level and then start to consolidate and digest this big move lower. But I think that the selling pressure that there was today, I don't think it's satisfied. I think we're going to get a little bit more downside tomorrow, but we'll see. Like I said, I would not be the least bit surprised with how strong the market has been to this point. Being down as much as we were today, I wouldn't be surprised if the market just kind of snaps back and we're up 350, 400 points tomorrow. Neither would surprise me, but my gut tells me we go to test 320. We'll see what happens tomorrow. Now, let's get to my actual trade here, guys. On the SPY, I also made a trade on ENLV, which did an offering in the middle of the day. So I lost money on ENLV, but made well more than enough on the TVIX trade to cover that loss and then some. So walking away with a decent little green day, nothing crazy, but because I gave some of that money back in ENLV. But let's talk about the TVIX trade, okay? And what I talked about in the beginning of this video was tiering into your position when your ideal entry point is not met. My ideal entry point on this was 327. Why was it 327? I wanted this 50-day moving average test so bad, okay? This teal line you see on my screen is the 50-day moving average. And you can see this has played a very key role in the price action of the SPY over the last year. There's your support in late January. As I pan this back, remember in August with the trade war fears, all of that intense resistance in the month of August at the 50-day moving average, you had a little minor area of support, got below it, then it became resistance again until we gapped back above that level. The 50-day moving average has been key, okay, in the price action of the SPY over the last year. So today, when we had the gap down, I drew a line right across the 50-day moving average. And after we opened up and we put in that initial morning low, that also lined up dead even with the 38.2 Fibonacci level. There's your 38.2 Fib level, lines up perfectly with the 50-day moving average. I wanted that area to get long the TVIX bad. I decided to go long the TVIX today instead of buying SPY put options because the SPY options today, same day expiration, were going to be extremely volatile because A, it's a same day expiration, so they're going to be very volatile already. But when the SPY is moving around like this, the SPY is moving 2, 3, 4, 5 points and has such range like it did today, those options are going to be flying all over the place. You'll be down 50, 60, 70% on your position. Then it'll be up 200%. Then you'll be back down. I mean, they'll move around like crazy today. So I wanted a little bit less volatility, and I knew the TVIX was going to be in play. So I went after the TVIX instead. But you guys can take advantage of SPY options as well to take advantage of this downward of this down move. And if we continue lower tomorrow, you can look for Wednesday expiration. They'll be a little bit less volatile than the ones today. Okay. So like I said, the game plan coming into the day today was a bounce off the opening bell. Bargain shoppers come in, try to dip buy some of this, get some high quality names cheap. Today we were gapping down like 850 points. Come in, start to buy that up. We get a little bit of a bounce. See if that bounce can take us to 327, then get short and have all that selling pressure kick in. I thought the discount buyers would be satisfied pretty early, and the selling pressure would kind of kick in and would take the markets lower. So right off the bell, we got that bounce higher, which is exactly what we were looking for. But right in here, you start to see how we start to like kind of top out. And at this point in time, we're at the 23.6 Fibonacci level. And I'm saying it feels like the market is starting to tire. We're starting to kind of round out the top. This could be the top, and then we could eventually move ourselves lower. I wanted here. Okay, right? I wanted right in front of the 50-day, but we didn't quite get there. So now I'm starting to say to myself, man, this isn't the ideal entry point, but I want to be involved in the trade because I think this might be the high of the day in the SPY. I want to get involved here. I might not get the move to 327. But if we did push to 327, I want to make sure I can still sit in that trade because you need to give it to the 50-day moving average. I expect there to be such resistance at the 50-day, you would need to give it to there. So that's why right here, I entered a tier 1 position, the TVIX. Okay, so here's the TVIX chart. Okay, so I'm entering a tier 1 position right here in the TVIX. Now, it's important to note that when I'm trading the TVIX off of the SPY, I'm not basing my stop loss or my entry on the TVIX chart. I'm basing it on the SPY chart. So that's why I'm showing you the SPY chart. This is what caused me to make my decisions to enter and exit the TVIX when I did. So here's the SPY chart. There's my tier 1 entry. The reason why, I'll take it to my trade announcements. Here you guys can see I'm long at tier 1 at 57.47. Stop loss if the SPY gets above 327. That's the 50-day moving average. Okay, so there's the tier 1 entry. The reason why I'm in only a tier 1. This is important, guys. Listen up. The reason why I'm only in a tier 1 is because if the market does push up to 327, a tier 1 will allow me to comfortably hold into this push to test the 50-day. And then if the 50-day rejects, then I can add to the position and look for that rollover. But if I'm in a full-size position, it makes it a lot more difficult to hold if we get that push up to 327. So 327 is my ideal entry. Markets don't always give you the ideal entry. I think this might be the top in the SPY. So I want to make sure that I'm in the trade. So I enter a tier 1 position. Tier 1 is 25% of my desired size. Okay. So I'm in tier 1 in case we do move to 327. I can manage that. I can stomach that move. I can stay in the trade. And on the flip side, if this is the high of the day and we do roll over, I'm in the trade. I can add to the position and I can catch the move that I'm looking for. Now, I end up adding to a full-size position. This is lesson part number 2. Why did I add to the position? You have to understand when you're doing the tier trading method, which is what I teach all of our members, the reason why you enter tier 2, something must have changed. You don't enter tier 2 just for the hell of it. The reason why you enter tier 1 has to be confirmed some way. Something has to have changed. You must have some new piece of information that causes you to enter tier 2. That new piece of information for me was that rejection at the trade line. See how the trade line comes rushing down? You had a new high of the day and we had a strong rejection right there at the trade line. That to me, remember I just said I'm entering tier 1 because it looked like the market was starting to round out, looked like we were having resistance here at the 23.6 fib level, and I felt like this was going to be the high of the day, then roll over. Well, that was confirmed when we tried to make a new high of the day and the trade line just stuffed it. You see how the trade line just stuffed it? Right there was my confirmation that we are not going to make it all the way to 327. So right here, I added to a full-size TVIX position. Back to my trade announcements. Here you can see I added tier 2, 57.39. Now notice I'm stopping out if the SPY gets above 326. So I've added to a tier 2 position and I've moved my stop loss down. Next lesson on this trade. When I'm in tier 1, I'm giving it back to the 327. I got a new piece of information because I'm in tier 1 because I think this is going to be the high of the day in the SPY. We're rounding out. My stop will also be the 327. If I get a new piece of information, which I did, that confirms that the market's rounding out and this could be the high of the day, I'm adding to a full-size position, which I did. But now at this point, the reason why I'm adding is because I believe now that's the high of the day. My tier 1 entry, the reason why I entered tier 1, I'm getting confirmation. I'm correct in that thought process. So now I no longer need to have my stop loss all the way at 327. Now I move my stop loss down to 326. Because if I'm correct, the market should not get back above 326, where we just got rejected at the trade line. If we do, I'll exit this position. That's why you see when I added tier 2, my new stop loss was 326 on the SPY, not 327, the initial entry. This is an important thing for you guys to take notice of when you are tiering into your positions and adjusting your stop losses as you go. Okay? I got new information that caused me to add to my position, but also new information that caused me to move my stop loss down. Okay? And then you guys can see there's the break and there's the rollover. We never got back above 326, and then we rolled over, and the markets traded much lower back down towards the low of the day. I took a little piece of profit off right here, guys, at VWAP just to play it safe, because if VWAP held, then I thought we made new highs. I felt we had to get below VWAP in order for the trade to trigger. I took a small piece of profit off at 58.05. We extended below VWAP in front of the low of the day. I took another piece of profit off at 58.79. And then you can see here, as we get down towards lows of the day, we start bouncing around at the low. I take my final piece of profit off the table right here in the TVIX at 61.20. So I feel like I could have maybe did a little bit of a better job with this middle tier. The bulk of my position off at 58.79. I wish I held on to that a little bit longer. You know, maybe this was a little early getting out of the bulk of my position. I would have liked to have gotten out of it maybe more in this area. So maybe I could have traded those tiers a little bit better, but nonetheless, guys, still a nice trade. I'll take you to the TVIX chart so you can see the TVIX chart. There was, okay, the first entry. There's the second entry. Here's your first take profit. Here's your second take profit. And then here is your final and third take profit. Okay, so entry 1, entry 2, take 1, take 2, take 3. All right. And I left a little bit on the table there. We ended up going a little bit higher than TVIX. Went all the way up to 64 and change. And after the market, we pushed a little higher. Now we're kind of trading sideways. All right. So that's the trade here, guys. But again, when I'm trading the TVIX, I'm doing so off of the SPY chart, not the TVIX chart. That's why you see in my trade alerts, my stop loss is based on the SPY price action, not the TVIX price action. And that's how I always go about trading the TVIX. And this ended up being a really nice trade. Okay, so it ended up being a really nice trade. Like I said, I gave some of the profits back in ENLV, but still a profitable day. And some really good lessons in here about, you know, where you can make money when the markets are having such clear, distinct down moves, but also how to tier into your positions when you're not getting the ideal entry, and then also how to adjust your stop loss mid-trade. Okay, so good stuff today, guys. Tomorrow's Teach You Tuesday. The chat room is open for free. If you want to come join me, see my screen, hear me on the mic, trade with me live, and the rest of the TTG family, go to truetradinggroup.com. Upper right-hand corner, click on TTG Tuesday, fill out that form. You'll get an access link that'll give you entry into our chat room for free, starting at 7:30 a.m. Eastern time. Tomorrow is when that chat room opens up. All right. If you guys haven't done so already, make sure you subscribe to the channel, hit that notification bell. Make sure you don't miss out on any more of these awesome videos. And of course, smash that like button for me. Show me some love. Comment below, guys, with any questions. I answer each and every single one of you. And I'll see you guys in chat tomorrow for Teach You Tuesday. Later.